As we come to the end of this fascinating RMB Think Summit, let's try and put a punctuation point on what has happened today and try and discern what the major takeouts are. And in that respect, a person who's been driving the process is Isaah Mhlanga, who's Chief Economist at RMB. Isaah, after a full day of discussion, it's a difficult one, but what was the single strongest message you think that came out of this event?
If you listen through all the speakers, the global reset is no longer just something that is in the future, it's happening. That message was consistent, but the importance of institutions in that global reset to act as shock absorbers was also quite prevalent across all speakers. And then there is, Africa historically has always been a recipient of change. But in today's messaging, it was that, opportunities are there, resources are there, but that alone is not enough. It has to be embedded in execution. That's where the dividend, the youth dividend or the population dividend is going to actually emerge. That's where all these opportunities can translate into economic growth, which I think we have not had a lot. We always speak about all this potential, but not the how to actually get the potential to be realized.
And that's exactly the point. I'd suggest to you that execution is a very well-worn phrase, particularly in the South African economy. So if the theme then was global reset, what does that mean, or what should it mean in practical terms for this economy?
In practical terms, it means the economy has a lot of opportunities, but it's also facing a lot of the external risks, which means we need to build the resilience for the economy to absorb the external shocks better. You can think about the oil price shock, for instance, if we were to make it a lot more real at a personal level. Fuel price hits everybody. We have these investments in AI. We also have these investments in green technology. How about making our logistics sector a lot more resilient to external fuel price shock by increasing the electrification of it? That becomes a real policy decisions policymakers can make. But also, if we look from a monetary policy perspective, what we heard from Leigh Brainerd is the SARB should not wait for the so-called second round effects, because it becomes a lot more difficult to control inflation. That's a real advice to our monetary policy makers. We can also extend that to our fiscal authorities. The one message that came from Professor Sachs was that there are certain aspects of an economy that needs to be funded from our own fiscus and not from external funding. One of those was education. And that is applicable across the African continent to say, yes, we have a youthful population, but until that population have skills, it can never, be a dividend. We can't get a dividend out of it, but we can't ask for financing externally for education. It has to be funded from our fiscus. If it means governments go and borrow to invest in education, they have to do that.
In fact, Professor Jeffrey Sachs, an expert in sustainable development, was very blunt about that. He actually said, no one is coming to help you.
Absolutely. There's always a cost for that which you need to put to drive, which means we shouldn't expect it to be free. And external parties will always want something if they do finance you. So your point is completely valid. No one is coming to help us. We need to come up with the solutions ourselves and back ourselves, which was also the message from the conversation about financing development and infrastructure with the CEO of the DBSA, Tumelo, and the CEO of the IDC, which was chaired by the CEO of FESRAN, Mary Villakas, to say we need to be confident about our own development and invest in our own infrastructure before we can ask external parties to come and invest.
Yet something is holding us back. What is it?
It's lack of execution. That's the one thing that is holding us back. We have brilliant plans that have been on the table for so many years, but we haven't followed through with the execution. That is where the private sector has now come in and stepped into critical sectors of the economy, helping to execute, which is a skill that is not abundant in the public sector, but it is abundant in the private sector. So injecting that in energy, we have solved load shedding. We're now bringing that into logistics, and hopefully it goes into the water sector and all the other critical sectors of the economy. It is execution.
So do you think then that speakers, and for that matter delegates as well, are now starting to see South Africa and the rest of the continent more as an opportunity, or do you still think there is concern that it is a risk story?
It's a bit of both. The traditional way of viewing Africa has always been from a risk perspective. But what we are seeing is a change or an evolution into that view. We heard today about the Lobito Corridor, the railway line from Angola into DRC and Zambia. Still, it has an extractive nature to it because these are countries that have copper, the critical minerals required for decarbonization. But then if we combine that with the Africa Now part of our theme that says we need to increase beneficiation in our own continent, that can then, work well to say we can now export beneficiated products, value-added products that can easily move over rail. So there's a win-win that will come from investors into the railway lines, but also from the manufactured products that come out of the continent. So we have to do a lot more in the continent to generate the jobs, but we need to be able to feed into the global value chains.
So a final question then, as someone who was driving in many respects this conference, what would you like delegates to leave with today? How would you like them to think differently about Africa and its potential? Do you think the needle was moved?
I think the needle have moved. A lot of the investors invest in the broader continent. If you look across Africa, a lot of South African investors, they invest outward, out of South Africa into Africa. And I think that is one thing that we know. More likely we are going to see a lot more of the investors looking to Africa for growth. South Africa is a saturated market, population of only 60 million people. There's so much goods you can sell and services you can sell. The broader market is in the rest of the continent. That's 1.5 billion people by 2050 that is waiting to buy services, goods. With a strong industrial base within the South African economy, we can manufacture for the continent. So the more we trade with the rest of the continent, the better the growth for South African companies. And I think that message is landing.
A wide, broad and optimistic canvas ahead. Isaah Mhlanga, thank you very much.
Thank you for having me.